Thank you for joining our Strike the Gong for Financial Literacy event. The webinar is about to begin. A few housekeeping reminders. The webinar will be conducted in English with simultaneous interpretation in Cantonese. You can select your preferred language at the top right-hand corner of your screen. You will also see the agenda tab on the right side of your screen. Click the tab for more information on today's speakers and program. Thank you. Good afternoon, ladies and gentlemen. Welcome to our Strike the Gong for Financial Literacy event. This is Hilary from HKEX, and I will be your MC today. This is the fourth year in a row that we are hosting this event. We are proud to celebrate the World Investor Week in Hong Kong with today's ceremony, joining stock exchanges around the world to raise awareness of investor education and financial literacy. Sustainable finance products are becoming increasingly prevalent in global markets. And today, we are pleased to be joined by a number of industry leaders who will discuss how they are promoting the growth of sustainable finance through regulation, engagement, transparency, and capability building, empowering investors to make informed and sound financial decisions. So to kick off today's event, I would like to invite Ms. Glenda So, co-head of markets for HKEX, to the stage to deliver the welcome remarks to us. Glenda, please.
Hi. So distinguished guests, ladies and gentlemen, good afternoon. It is a great pleasure to be supporting World Investor Week again, and to be partnering with our friends at the Investor and Financial Education Council. Sustainable finance is the theme of the World Investor Week this year. And sustainable finance is something that HKEX cares deeply about. In the last few years, we have seen the issues of sustainability become front and center of the global agenda. For businesses, sustainability performance is no longer something that is nice to have, it is a must-have. And sustainable finance is rightly seen as having a key role in driving the global sustainability agenda. As a result, investors are increasingly seeking companies with good performance, commitment to ESG measures, such as greenhouse gas emission, labor rights, and board diversity. Businesses are also increasingly seeking capital to finance their business transition to net zero. Exchanges have important role to play. HKEX have 3 roles. We are a listed company, a regulator, and a market operator. In all 3, we see ourselves as change agent in global markets. As a listed company, we seek to lead by example. We have committed to the Glasgow Financial Alliance for Net Zero, which involves making net zero pledge and developing and implementing business plan for a low carbon future. As a regulator, we're in position to advocate and set standard to ESG disclosure. Through this effort, we aim to facilitate the development of a corporate culture which ESG practices and reporting are fully integrated into daily business operations. As a market operator, we're developing an ecosystem of sustainable and green investment products to help fund companies on their low carbon transition. We connect investors, issuers, and other stakeholders on platforms that provide information, access, and transparency on a wide range of sustainable, green, and social investment products, such as green bond and ETF. As an example, Stage, who is a central hub for data and information for sustainable and green products. Stage offers clear, consistent, and comparable ESG data, which is important as it enables investors to make more informed investment decisions. And it helps to address investor concern about inaccurate ESG reporting, known as greenwashing. We are also having the foundations for Hong Kong growth as a premier carbon hub for Asia. In July, we launched the Hong Kong International Carbon Market Council, which brings together leading corporates and investors to explore carbon opportunities in the region. The Council will allow us to understand what kind of carbon market our stakeholders need and how they want to fund these new climate projects, technologies, and businesses. We hope this new insight will help us to develop an efficient and effective international carbon marketplace that support the sustainability objective and net zero strategy of investors and corporates. Capital markets have a key role to play in driving pressing global climate agenda. We hope all of you can join us in this exciting and meaningful journey. Meanwhile, at today's event, industry leaders will share their expert insight on sustainable finance with you. And we will be also striking the gong to celebrate this global movement to foster investor education and financial literacy. I hope you find today's event insightful and enjoyable. Thank you very much.
Thank you, Glenda. Now, it gives us great pleasure to welcome Mr. Victor Dawes, SC, Chairman of Investor and Financial Education Council, to say a few words to us. Victor, please.
Thank you. Good afternoon, ladies and gentlemen. On behalf of the Investor and Financial Education Council, I'm honored to join hands with HKEX in support of the World Investor Week 2022. World Investor Week is an annual global event led by International Organization of Securities Commission to raise awareness of investor education and protection. The campaign is supported by more than 100 jurisdictions globally and many prominent organizations, including, of course, the HKEX. One of the major themes of this year's World Investor Week is green and sustainable finance. Over the past few years, investors place very significant considerations in environmental, social, and governance factors in their investment. And this trend is not only prevalent among institutional investors. Retail investors are also following the same trend. As concern mounts over issues such as protecting the environment, contributing to a more equitable society, and raising standards of corporate behavior, socially and economically responsible companies are becoming more attractive. Investors are keen on contributing to a more sustainable future and also to manage investment risk. At the same time, we're witnessing a growing number of sustainability-related investment products in the market as part of the efforts to finance the greening of international, regional, and local economies. In Hong Kong, our green and sustainable finance market, is growing in size and in depth. The volume of green and sustainable debt arranged and issued in Hong Kong in 2021 reached a record high of $57 billion US. This is a 400% increase as compared to the previous year. On this, the volume of green and sustainable bonds amounted to over $31 billion US, accounting for 1/3 of those issued in Asia, making Hong Kong #1 in our region. Hong Kong's first retail green bond issued in May this year is the largest retail green bond issued globally reaching 20 billion Hong Kong. By participating in green finance, we are greening Hong Kong. We are also sharing the fruits of Hong Kong's sustainable development. According to IFEC's retail investor study conducted in 2021, 38% of investors were aware of green and sustainable finance, while 46% are interested to know about investment issues related to sustainability. In fact, the number is even higher amongst young investors below the age of 30. 54% of investors in this age group indicated they would like to find out more about sustainability-related investment product. This is, of course, very encouraging. At IFEC, we believe investor education is a key element to raising public awareness and understanding of green and sustainable investing. This will enhance investor protection and is in line with the policies and regulations of industry bodies such as SFC and HKEX. They are also keen supporters of the efforts in making investment market in Hong Kong greener and more sustainable. In this regard, we at IFEC has been dedicating resources and focus on enhancing investor and financial education in Hong Kong and in recent years included sustainable related investment topics in our agenda. We will continue to equip the public with knowledge about sustainability related investment products through collaboration with our stakeholders. We strive to enhance the awareness and exposure of a variety of green financing opportunities, such as retail green bonds and potential investment opportunities under the cross-boundary investment Wealth Connect scheme in the bid of supporting the sound development of this growing market in Hong Kong, as well as in the Greater Bay Area. To nurture the next generation of investors, we will continue the momentum we have built over the years to organize investor education initiatives such as talks and webinars targeting young investors, as well as proactively promoting investment knowledge across different mediums, including, of course, the popular social media platform amongst the younger generation. We are dedicated to our mission to equip the public to be able to make informed investment decisions that contribute to a greener and more sustainable future. It goes without saying that we cannot do this alone. We would like to call on all of you for support to strengthen the understanding of green and sustainable investment in Hong Kong and make it more prevalent and accessible to the public. Last but not least, we will have to express our deep appreciation of Hong Kong EX for their continuous support and collaboration on investment education. We thank you for their efforts in empowering the financial community to strive for a sustainable future of Hong Kong as a top IFC. We look forward to more collaboration ahead on the ongoing education journey to a greener and more sustainable future. Thank you very much.
Thank you, Victor. Please remain on stage. Now, I would like to invite Glenda to the stage again for the upcoming market open ceremony. Glenda, please. So before we strike the gong for financial literacy at 1 p.m. today, let's take a photo together. Glenda and Victor, please give us a big smile with your eyes. You may also hold the mallet in front of the gong to take another picture to mark this remarkable occasion. So maybe let's give it a thumbs up. And the clock is ticking. At 1 p.m. sharp, we will hold our afternoon market open ceremony. We are using this ceremony to join other stock exchanges around the world in ringing the bell or striking the gong, in our case, to raise public awareness about investor education. So now it's about 30 seconds away from the market open, and we will invite you all to join me for the countdown of the last 10 seconds leading up to the gong strike. So are you ready? 8, 7, 6, 5, 4, 3, 2, 1, strike! Thank you, Glenda and Victor. So please take a step forward to the Gong and take a photo together to mark this occasion. Thank you very much. Please remain on stage. And now, I would like to invite our speakers on stage to take a group photo together. They are Ms. Alessandra Yang, Senior Director of Investment Products Division of Securities and Futures Commission, Ms. Tracy Wong Harris, Vice President and Deputy Secretary General of Hong Kong Green Finance Association, and Mr. Scott Lee, Senior Director of Asia Pacific Research Exchange of CFA Institute. Please give us a big smile with your eyes, everyone. Thank you very much, and please be seated. Today, we are delighted to have industry leaders here with us to share their knowledge and insights on driving the sustainable finance agenda from different perspectives. And now, I would like to introduce today's first speaker, Ms. Alessandra Yang, Senior Director of Investment Products Division of Securities and Futures Commission. Alessandra currently serves as the Senior Director of Investment Products Division of SFC. She has been actively involved in formulating and implementing policies and initiatives relating to the regulation of the asset management industry. May I invite Alessandra to return to the stage? Alessandra, over to you, please.
Thank you. Good afternoon, everyone. First, I'd like to thank the Exchange, the IFEC, for inviting me here today to share with you what we, as regulators, have seen and done in the retail ESG fund space in Hong Kong. I believe all of you would agree with me that under the threat of rapidly increasing climate risk in recent years, green and sustainable finance is a topic that cannot and should not be ignored. Many countries and regions, including China and the European Union, have publicly stated that they are committed to drive their economies in a greener and more sustainable direction. In addition to initiatives put forward by governments, many fund managers are also launching sustainability-related ESG products, which will help to steer trillions of dollars of investments into sustainable capital and infrastructure projects to achieve these sustainability goals. This, in turn, brings new investment opportunities for investors. At present, the SFC has approved more than 150 funds with an investment focus on climate change, environmental protection, ESG, or sustainable development. And this includes 8 exchange-traded funds. We are continuing to receive applications for new ESG funds. However, despite the significant growth in the number of ESG funds in Hong Kong over the last couple of years, the take-up rate by retail investors in Hong Kong is still fairly low. According to the retail investor study published by the IFEC in September last year, although 38% of surveyed investors said that they understood green and sustainable finance, only 2% said they had actually invested in any ESG or sustainable related products, and only 6% expressed interest to invest in these products in the coming year. There were 47% of respondents who said that they were not interested in green and sustainable finance. And there were 3 common reasons as to why they weren't interested. I would like to take this opportunity to offer some observations on these three reasons. The first reason is the perceived absence of a track record of good investment return. In my view, this is a common misunderstanding about green and sustainable investing. Many people still believe sustainable investing will generate lower returns, or that this type of investing is motivated solely by personal ethical preference or the desire to be socially responsible, with financial returns being much lower in the order of priority. In fact, more and more research and analyses has shown that sustainable investing has a relatively lower volatility and can minimize certain types of long-term risks. So sustainable investing really shouldn't be equated with lower returns. In addition, climate-related risk is now widely recognized as a financial risk that can affect investment returns. So incorporating important ESG issues into investment considerations is an irreversible trend. The second reason is the limited investment choice. While this may have been true a few years ago, it is not the case now. You may recall I just mentioned that we've authorized over 150 ESG funds that are available to retail investors in Hong Kong. This is a four-fold increase from 2020. If you're interested to take a look at these funds, the SFC has a central database on its website with all of the SFC authorized ESG funds posted on this webpage. The third reason, which is possibly the most frequently raised concern, is that investors are not familiar with ESG or sustainable investment products. And this is something that my division has been looking into for a number of years. Back in 2018, the SFC issued its strategic framework on green and sustainable finance. And one of the action agenda was to facilitate the development of a wide range of green-related investments by providing disclosure guidance and harmonized criteria and frameworks for these products. At the same time, we saw a growing trend of asset managers who were interested in offering products with ESG-related mandates in Hong Kong. Against this backdrop, in late 2018, we conducted a review of the disclosures of SFC authorized funds that appeared to have an ESG mandate. Our review showed that there was a substantial gap in the quality of disclosures in areas such as the investment strategy, the investment selection process, and ESG criteria. In particular, a majority of these funds did not disclose how they incorporated ESG factors into their investment selection process. Now, while this may have been due to the evolving ESG investment space and the wide spectrum of taxonomies and strategies, it was far from satisfactory. To address this issue of disclosure quality and to improve the disclosure comparability so that investors can better understand ESG features of these funds and make better informed decisions, we took the initial step to issue our first circular in April 2019 on ESG funds. This circular sets out the disclosure requirements for ESG funds, including the need to describe the fund's ESG focus, relevant ESG criteria considered, and the associated investment selection process. The 2019 circular was an important message to fund managers that they are expected to do more than simply make the claim that their funds take ESG factors into account without making it clear as to how they do this. Since then, awareness of sustainable investing has grown a lot. ESG investment products continue to gain traction and have become a global trend. Internationally, regulatory authorities have announced initiatives to require enhanced disclosure of ESG products, the main purpose of which is to enable investors to have a better understanding of the ESG features of these products so as to decide whether the products really meet their investment needs. Being mindful that our requirements need to keep pace with the development of an increasingly diverse range of ESG products and strategies, In June last year, we issued further guidance for ESG funds to make sustainability-related disclosures more transparent, more comparable, and more consistent. In addition, we also introduced a new requirement for ESG funds to conduct periodic assessments of how, in practice, they incorporate ESG factors and disclose this assessment at least annually. This is because, in our view, it is important that fund managers are responsible for telling investors how ESG products have delivered on their ESG-related focus, or, if they have failed to do so, the reasons for that. In addition to that, with respect to a fund's name, we also reiterated our general expectation that a fund's name must not be misleading. We expect that if a fund contains a reference to ESG or similar terms in its name or its marketing materials, these references should be accurate and proportionate to the actual ESG features of the fund. It is important that they should not overstate or overemphasize these features. In terms of the way forward, gatekeeping against greenwashing remains a key SFC priority. We will continue to monitor ESG funds' compliance with the requirements that are set out in our 2021 circular and to keep a close eye on market as well as regulatory developments globally, including the development and implementation of ESG fund-related developments in other jurisdictions, the growing trend of using third-party ESG ratings and data products by ESG funds, as well as the way in which taxonomies for ESG funds might be adopted. At the same time, effective investor protection must include measures to educate investors so that they learn to protect themselves. We will continue to work closely with the IFEC to support investor education in this area through regular updates via online and social media platforms, as well as events like this one. Now, I would like to spend a few minutes to share some key points that, as an investor, you have to be aware of when you are considering to invest in an ESG fund. While we have been enhancing the quality of ESG disclosures and the transparency of ESG funds, so far there has been no single set of internationally accepted standard as to how an investment fund should be named or labeled as green or sustainable, as this involves different subjective factors and criteria. There are also a host of different opinions and ongoing debate in this internationally. For example, there is huge disagreement on whether nuclear power should be regarded as green or sustainable. There are also different types of ESG strategies that an ESG fund might adopt. One of the common strategies of ESG funds in Hong Kong is thematic investing. Here, the fund pursues specific ESG-related themes or issues and normally has targeted exposure to these specific themes by investing in securities of companies or sectors that engage in the related business activities. For example, a fund may invest primarily in companies that are engaged in the renewable energy business or any other businesses that are offering solutions to help climate transition. Another common strategy is the best-in-class strategy, which aims to seek positive ESG-related outcomes by selecting the better ESG performers in the investment universe based on measurable ESG indicators or metrics. A less common strategy for our ESG funds is impact investing. This is investing with the intention to generate positive and measurable ESG impact alongside financial returns. In view of the diversity of ESG funds and the lack of an agreed standard, we are committed to reducing the risk of greenwashing when we approve ESG funds, particularly for retail investors. We are very careful in assessing whether a fund really incorporates ESG as its key investment focus before we approve the fund as an ESG fund in Hong Kong and place it on our ESG funds list. For example, it must clearly disclose how ESG is related to its investment theme and the majority of the underlying fund's assets must also be invested in the corresponding ESG theme. Investors should also be careful to avoid making an investment decision based solely on the name of the fund or its marketing materials. For example, some funds may simply exclude certain industries, such as oil, gas, tobacco, and weapons, from its investment universe. This relatively simple way of excluding investments in certain controversial industries is not sufficient to be recognized by us as an ESG fund. If the name of the fund creates misunderstanding that the fund is an ESG fund when it is not, the relevant fund will need to add a statement against its name that it is not an ESG fund that is approved by the SFC. In order to provide more transparency to investors, from January this year, we have also optimized the original ESG funds page on the SFC website by including ESG investment themes and related investment strategies for each ESG fund. We strongly encourage you to visit this dedicated webpage to check whether a product is an ESG fund that has been approved by the SFC, or just to learn more about the ESG features of these funds. In fact, almost every ESG fund will have some differences in their characteristics, themes, and focuses. The definition of ESG or sustainable development also inevitably involves some degree of subjective opinion or values. Therefore, investors are highly encouraged to do their homework before investing and to carefully consider whether the relevant product meets their expectations or personal investment preference, as well as risk profile. And do ask your professional advisors if necessary. To wrap up, I hope that in the near future, investors will have better, more reliable, and more comparable information to deepen their understanding of ESG products. And finally, I hope you all enjoy today's event and extend your support for green and sustainable investing. And I wish you all good luck in your investments. Thank you.
Thank you, Alessandra. We appreciate you taking the time to share your views on how ESG products are regulated in our markets. In the next session, we are pleased to have Ms. Tracy Wong Harris, Vice President and Deputy Secretary General of the Hong Kong Green Finance Association. Tracy is the Vice President and Deputy Secretary General of HKGFA and the Head of Sustainable Finance for Greater China and North Asia at Standard Chartered Bank. She is also an appointed member of the SFC Climate Change Technical Expert Group. In her presentation, she will share her views on the latest trends shaping sustainable finance and product development. Tracy, please.
Hi, good afternoon, distinguished guests, ladies and gentlemen. I'm delighted to be here today sharing with you the latest sustainable finance market and product developments. Thank you for Stock Exchange and IFEC for inviting me for this sharing. Looking at the overall sustainable finance market in the past decade, you can see from the graph that it has gone through tremendous growth. Last year, 2021, we have seen the overall sustainable finance market exceeded $1.7 trillion US, and it was double globally and close to triple in Asia. In terms of product developments, Green bond is still the biggest contributing to a third of the market. But we have also seen a tremendous growth, the fastest growth, in fact, from the sustainability-linked loan market, which contributing to a quarter of the overall market today. Looking closer to home, Hong Kong 2021 total debt issued and arranged in Hong Kong hit $57 billion US, with 55% in the bond market and a third of totals in Asia, and of which 80% is from mainland issuers, demonstrating Hong Kong's superconnector role between mainland and the rest of the world. And in loans, we have seen 2/3 from the sustainability-linked loan and 40% of which from the real estate market. Looking at thematic developments, I call this from green to rainbow. There are a number of international policy and guidelines guiding the development of the sustainable finance product labeling, the thematic developments. So very early on, we have seen green loans and green bond. The same principle also applies for blue bonds. And with this, the use of proceeds is dedicated to green projects like green buildings, energy efficiency, solar projects, etc. Then we have seen the development from the social category. For example, we have seen a very strong pickup over the last 2-3 years during COVID, and also use of proceeds spent on essential services and essential infrastructure, etc. Then we have seen the sustainability, which is a mix of the both, social and green together, use of proceeds issuance. With the latest, still remain in the category of use of proceeds is the transitions category. This is the most nascent thematic in the market. And with that, we are expecting the G20 to publish the transitions financing guidelines soon, next month. So watch this space. And as a bank, we have also developed our own transition finance framework to help our client to accelerate their transition journey. This is published on our website, so feel free to go and look at the eligible assets and activity under the transitions category. Now, as I mentioned a few times, we have seen tremendous growth in the sustainability-linked category, in particular in loan. So for this, I want to spend a little bit of time explaining what is sustainability-linked. So for this product, it moved away from just use of proceeds, meaning that capital only ring-fenced to particular projects or assets, but actually can apply to working capital of a company. So with the sustainability or key performance target that's set according to the company's aspirations on their sustainability target. With that, one particular feature is on the pricing. So the margins for sustainability-linked product is tied to the performance of the borrower. With that, we have seen the differentiator between how the sustainability-linked loan product developed globally and also in this side of the world. Globally, majority of the sustainability loan, we've seen the margins is tied to incentive and penalty, meaning that if the borrower perform and deliver the target, then they enjoy a pricing benefit. On the other side, if they miss this target, they are subject to penalty. However, in Asia, we have seen the market diverge slightly, where we still see majority in the incentive category only. But lately, we have seen a number of transactions also being very fast catching up, seeing both sides, incentive and penalty in this market. And I guess this is how the reason why over the last 3 years that the fastest growth of sustainable finance product are from the sustainability-linked loan, because it opened up the market to working capital, and there's incentive of driving borrower on this particular product. Now, we're talking about product. I'm sure all of you have heard about loans and bonds. So as I mentioned, thematic. So across the thematic, we have seen loans and bonds of green, blue, sustainability, social, transition, sustainability link across loans and bonds. But actually, there are a lot more sustainable finance products in the market and in Hong Kong here, where we are today. So we have seen liability products being developed, so on deposit and on cash management product, sustainable deposit, sustainable saving account, and payroll recently being developed from liability side. And also sustainable trade. And how the use of proceeds thematic and also link apply to the trade finance product for SME and supply chain on import and export letter, guarantees, receivable services, etc. Also, we have seen derivative market being developed in, again, use of proceeds and links can also apply to the derivative market in swaps and in repos. And as you have heard from Glenda earlier, Hong Kong Stock Exchange been leading the way and setting up the Hong Kong International Voluntary Carbon Market Council. So the carbon market development is one of the key focus also, and one of the latest, I say in this side of the world that we have seen. So as a bank, we have been facilitating Asian clients to go to the EU ETS compliance market, and also have the capability of trading voluntary carbon credit with our clients here in Hong Kong. Now, last but not least, we have seen a lot of activities in the retail market. Alessandra from SFC have shared earlier, over 150 approved ESG funds now available for retail. And Victor mentioned earlier, the Hong Kong government have issued the first retail green bond. So you and I can easily have access to sustainable finance products from any commercial bank buying retail green bond, and also in the ESG fund space. But that is not it. Because in Hong Kong market, we have seen commercial bank offer green mortgages. So if the building that you and I stay that is green building certified, then you can enjoy some incentive for the green mortgage offering. And also, we have seen sustainable deposits, sustainable saving account available for retail in Hong Kong market also. So there's a whole full suite of products already being developed in the sustainable finance market, all the way from large corporate financial institution to SME and retail all the way. Now, let me share my last thoughts about green and sustainable finance market. So the sustainable finance market has gone through tremendous growth, and this is expected to continue. In order for us to transition to net zero and have a chance to keeping temperature rise to below 1.5 degrees, we need an additional 100 trillion US dollar investment in ESG market. And also, Hong Kong has a key role to play as the regional sustainable finance center, being the super connector with mainland and the rest of the world. Last but not least, to accelerate to net zero, it requires all of us to take urgent actions, no matter what role we play, and the willingness to collaborate. With that, thank you very much. And once again, I thank Stock Exchange and IFEC for hosting today's event. Thank you.
Thank you, Tracy, for giving us an overview of what is happening in the world of sustainable finance and the opportunities ahead. Thank you so much, and please be seated. And now, I would like to invite Mr. Scott Lee, Senior Director of Asia Pacific Research Exchange at the CFA Institute, to the stage to share his views on ESG investing. Scott leads a team of marketing professionals at the CFA Institute who are responsible for organizing a wide range of events focused on investment outlook, sector analysis, ESG, and fintech. Scott, please.
Thank you. Honorable guests, ladies and gentlemen, it is my great pleasure representing CFA Institute to support this meaningful Ring the Gong for Financial Literacy event. Thank you so much, Hong Kong Stock Exchange and IVC, for the invitation. I believe CFA Institute is known to you by our exam and professional qualification. In addition to that, we are the world's largest association of investment professionals, with aims to promote the high standards of ethics, education, and professional excellence. And as a not-for-profit organization, we care about investors' outcome for the benefit of society. So today, I'm going to share some insights and ideas about upskilling our knowledge on ESG, or green and sustainable finance investing. The three questions to address here would be why, what, and how. Whether you are a practitioner in the finance and investment industry or a retail investor yourself, it is important and helpful for you to equip your ESG knowledge. And why is that? Because there are both investment opportunities and career opportunities. So in this slide, I think from an investment angle, ESG investing has already become mainstream, and there is a huge demand from both asset owners and investors. As you can see, according to the 2020 study published by the Global Sustainable Investment Alliance, GSIA, the global ESG-related asset under management has grown to US $35.3 trillion. And a study by Bloomberg Intelligence last year estimates that the ESG AUM may hit US $53 trillion by 2025. What does this figure tell you? It means that roughly every $1 in $3 of assets being managed would be ESG related. And let's zoom in from global to local. The China Society for Finance and Banking estimate that in the next 30 years, we will need as much as 480 trillion yuan on green financing in China to fund the core transition of its economy into one that is carbon neutral by 2060. And these figures tell you how bright the future of ESG investing is. While some of you think that ESG investing is only embraced by institutions, like the previous speakers have mentioned, we're delighted to let you know that it is also of individual investors' interest. At the end of last year, CFA Institute conducted a global online survey, interviewed about 3,600 retail investors. And in there, we can see an increasing interest in ESG investing. And for Hong Kong market specifically, 88% of retail investors being surveyed show interest in ESG investing. And besides an investment angle, there is a career angle. To cope with the huge demand on ESG investing, we need talents. For CFA Institute's Future of Skills report, being published by my colleagues about 3 months ago, we've analyzed 16 trending skills areas to identify gaps between demand for learning and supply of talent. And the largest gaps that we can find would be, has been AI, machine learning, and sustainability. And more importantly, the demand for sustainability skills has increased the most as compared to 2 years ago. This shows how much potential there is for a career in ESG. So after understanding the opportunities, let's find out more about ESG investing, what it is. So ESG investing actually involves a range of approaches addressing different investment objectives. Each approach has different characteristics, and one may overlap with another. Investors may apply more than one approach on a given investment strategy. Without further ado, let's take a look at a short video we produced, which highlights 6 generic ESG investment approaches.
Did you know investors use 6 methods for bringing ESG considerations into their decision-making, often in combination with one another? Exclusionary screening is the oldest method for evaluating ESG standards. It's centered around avoiding securities of companies based on activities that conflict with your moral values. Products involving alcohol or gambling, for instance. It also applies norms-based screening, meaning reviewing investments based on compliance with relevant international norms and standards, such as those pertaining to human rights. Best-in-class selection, also known as positive selection or positive alignment, is about investing in companies with better or improving ESG performance relative to sector peers. This method can improve the risk and return characteristics of a portfolio, as a strong ESG policy makes companies more aware of their risks and increases transparency. Active ownership is about engaging deeply with companies and entering into a dialogue on ESG issues and exercising ownership rights and sharing your voice to affect change. Examples include meeting with company representatives, filing a shareholder resolution, and engaging in public dialogue with policymakers. It is considered by many to be one of the best methods to maximize returns and reduce risks. Thematic investing is a type of investing based on following social, industrial, and demographic trends. Sustainability is at the heart of many of these trends, like clean tech, green real estate, and sustainable agriculture. The goal of impact investing is simple: to select securities with a disclosed intention to generate and measure social and environmental benefits alongside a financial return. An example of impact investing includes backing businesses that generate jobs in underserved communities. Lastly, we have ESG integration, systematically and explicitly integrating ESG considerations into investment analysis. Are you prepared for the rise of ESG?
I hope this video gives you a quick overview of various ESG investment approaches. And regardless of which approach we're adopting, having access to material ESG information would be crucial. And on this, we would say that the whole ecosystem is working together to enhance the quality and transparency of ESG data and reporting. For example, regulators and standard setters are enhancing sustainability reporting requirements and creating codes and standards. There are various standards in the market, and we're working towards a harmonization. As for corporates, they have started quantifying and reporting ESG performance in the financial reports. Meanwhile, ESG data and rating agencies are consolidating useful information to establish ESG metrics for performance measurement and comparison. On the other hand, fund managers have created ESG-related products with product disclosures, highlighting approaches and processes in managing, for example, climate or ESG risks. With all these inputs by stakeholders, what do some of the outputs look like? So let me quickly give you some examples here. On the screen here, I've actually captured a screenshot from the Hong Kong Stock Exchange Sustainable and Green Exchange website, or what we call the HKEX stage. In there, you get to see a range of sustainable, green, and social products available in the market, including bonds, equities, and exchange-traded funds. Within each product or company information, investors can actually study about the corresponding sustainable finance reports, framework document, and even external review information. Another example I would like to show you here is code and standards. The screenshot that I'm showing you is the ESG Disclosure Standards document developed by CFA Institute with the support from many ESG experts. The objective of the standard is communicate information about an investment product's consideration of ESG issues in its objectives, investment process, or stewardship activities. Codes and standards, as well as reporting framework, like this example, strive to preserve the integrity of information and to enable investors to better understand, evaluate, and to make comparison. Yet, despite the huge market demand and effort spent by stakeholders in the ecosystem, some retail investors remain concerned about penetrating ESG investing, or the participation rates remains low, as Alexandra mentioned. In fact, in a global recent study, trust study, less than 30% of Hong Kong retail investors being surveyed say that they're very likely to trust the ESG messaging or net zero pledges by companies and funds. And this resonates with a survey conducted by PicTech Asset Management and HKUST, where retail investors show strong intent on ESG investment. However, their awareness and associated investment experience remain low. Why is that? While some of the concerns are related to ESG data quality, risk of greenwashing, etc., one main reason would be the lack of ESG knowledge to understand and digest the material information in order to make an informed investment decisions. Again, like Alexandra mentioned, some retail investors, they don't penetrate green and sustainable investment because they think it's sacrificing return, but in fact, it helps generating better risk-adjusted returns. So here comes the third and final part of my presentation. How can we upskill our ESG knowledge? Our advice here would be very simple. It is through 3 different channels: online reading, attending topic-specific webinars and events, and last but not the least, consider pursuing structured educational programs. Online reading is probably the first step to get your foot in the door for ESG knowledge. There are plenty of educational and insightful ESG research, blog articles, and videos on the internet that you can actually Google them very easily. In here, let me give you a few examples. So starting from the left-hand side of your screen is the Investor and Financial Education Council website, the IFEC website. So the IFEC has actually created an excellent repository of green and sustainable finance contents, covering basic knowledge about ESG reporting and sustainable investing. Second one is the Hong Kong Stock Exchange Stage website, which I've mentioned before. And there you can find product information, case studies, and guidance materials. The third one is that earlier this year, the Hong Kong Monetary Authority has launched the Center for Green and Sustainable Finance, which contains data source repository, training information repository, and internship opportunities. And the last one on your right-hand side would be the CFA Institute Asia Pacific Research Exchange website that is managed by me and my team. So we've created an ESG thematic session here for you to find relevant research reports and articles. And all of the information that I mentioned here are free and publicly available. Yet, I do understand that sometimes it is difficult for you to digest this information on your own without guidance. And therefore, another channel for you to equip your ESG knowledge would be attending webinars and events. And I think over the past few years, the industry has organized probably over 100 ESG events covering a wide range of topics. The beauty of these events would be that each of them usually focuses on a specific topic. Secondly, speakers are all seasoned professionals and will be presenting you with the latest updates on market trends. Moreover, you can actually raise questions during webinars. As for physical events, it provides you with networking opportunities as well. Last but not the least, ESG is an important topic here to stay. So with continuous development and enhancement on ESG investment landscape, investors and practitioners may consider pursuing structured educational programs to fully enhance their knowledge. On this, educational institutions and professional bodies have created various learning programs and qualifications. The format and level of difficulties of these programs vary. As Hong Kong being an international financial hub and striving to be the green finance hub, we can pursue global qualifications here online through online study or to enroll programs offered by local providers. The screen here shows some examples of local programs available in the market. So, to summarize and to conclude, we can definitely see the rising trend of ESG investing, which brings along investment and career opportunities. But to grasp these opportunities, you need sufficient knowledge. To upskill your ESG knowledge, there are plenty of online resources, webinars and events, as well as structured programs for you to pursue. It is over to you now to take action. Thank you, and may I wish the World Investor Week initiative an ongoing success.
Thank you, Scott. Thank you all for that insightful sharings. We are now at the end of this year's Strike the Gong for Financial Literacy event. Once again, we would like to thank all our guest speakers and participants for joining this event. During the World Investor Week, the Investor and Financial Education Council has also organized a series of activities promoting investment knowledge and attitude in today's fast-changing and complex investment environment. Please visit the IFEC website by scanning the QR code shown on the screen for more details. Thank you and have a good afternoon.